So the business was doing well enough to cash flow itself. But once we again kind of changed the structure of the business and the clientele shifting um, from more SMB to enterprise, I needed to think about things differently, and I never wanted to put the business at risk. And you hear this all the time, like you could have a growing business, but if you don't manage it right, like you could be out of business pretty quickly. And I felt like more stress coming on with regards to that. And they were all great problems to have. So I thought about this in two ways. One, do I raise money, which at the time I didn't want to do. And I wanted to create these businesses without having substantial capital or investors, because dilution is expensive and equity is expensive. And it's often really sexy, but I never really fully understood it. Like I never understood why that was like in the headlines so much versus here's some entrepreneur grinding it out, figuring out how to cash flow itself that you'll never read in the headlines. And for me, it didn't matter though, because I wanted to look at the cap table that I had, the partners that I had, and I knew the right thing was to protect ourselves from dilution. Therefore, at that time, I couldn't even, like, the line of credit I even had access to was like $1 million. Like my employee expenses were over that in a monthly basis, so that wouldn't have helped that much. So therefore, I started to entertain the possibility of something else, like what can help me grow this business faster. After the Cranes Fast 50 meeting, I met with a wealth management advisor who asked me how he could help me with our business. And my first answer was, I think I might want to talk to an investment bank. I didn't even know what they did, really, to be honest with you. I didn't even understood what investment banks did, but I knew that, like, I heard that and I should probably talk to someone that does something in investment banking. Like, that's how naive I was. And he put me in touch with 3 different investment banks, which I think one got back to me fairly quickly. The other 2 didn't for whatever reason. And met with them, and we decided to do a little exercise to kind of see what the company was worth, and gave them access to financials and all that stuff. And we went through a few month period where they kind of ingested all this data, and they came back to me and presented to me what our company was worth. Well, simultaneously, as all this was going on, Cars.com had approached me and saw us in Cranes and said and realized we were in their kind of backyard. They're Chicago based as well. They had just went public recently, that they wanted to understand what we did as a business. At the time, they were just like interviewing multiple companies in automotive. They were looking for, I think, M&A opportunities to grow, and one thing led to another, and the CEO ended up in our place of business, and we spent an afternoon together, and we hit it off. And that led to a series of next meetings, which led to probably what we're going to talk about next. But it was really kind of serendipitous in that, like, by being on Cranes opened up this opportunity to get exposure to then lead me to meet with these investors or this investment bank, which then gave me enough data at that point to feel confident in where we were going and the valuation of our company.